Long video alert. This is on FX settlements. So if you have the luxury of time, then go for viewing the entire video in one shot because it is a comprehensive video on foreign exchange settlements. A lot of people in India, especially working with global investment banks, are involved in the clearing and settlement processes in different asset classes. So in this video, we're going to take a look at what are interbank foreign exchange transactions and how cross-border interbank foreign exchange transactions are settled, because remember that all the transactions, even though they take place in the domestic market, the settlement of that is the exchange of assets for currency, takes place across borders. So Sumit, one of the participants with the program of which I had conducted on trade life cycle for foreign exchange settlements, asked me this question. His question was very simple. FX settlements are cross-border. So his confusion was that if they are cross-border, how do the cross-border settlements take place? So let's learn about FX trades and interbank FX settlements today. FX trades take place in a currency pair. As the term suggests, pair means there will be two currencies involved. Over here, we're talking about the most globally traded currency pair, which is euro dollar. The euro dollar occupies almost 60-65% of the global trades that take place in the FX markets across the world. It's $1 trillion trade. Trades take place in the euro dollar market. The base rate, if you look at the currency pairs, okay, the notation, the terminologies are very standardized. So whether you're doing the processing of the trade in Venezuela or Budapest or in Mumbai, your understanding would be the same. So foreign exchange trades to that extent are very, very standardized in their terminologies. Their terminologies are also very unique. So let's take a look at understanding some of these terminologies. The first is understanding a currency pair. We always talk of currencies in pairs. The second one is taking the base rate. So over here, if you look at the currency pair euro dollar, it means 1 euro is equal to how many dollars? The rate tells you the price at which you can convert 1 euro in exchange of X amount of dollars. So when every movement is expressed in terms of euros, then the base rate is euro. In this quotation, the reference rate is dollars. That means the base rate remains the same and the rates keep changing against the base. Alright? In some markets, the rate could be traded in USD euro, in which case, in that particular market, the base rate is USD and the reference rate is EUR. Alright? So the currency pairs work out in a very extensive example of understanding the trades that are going on. Okay? Let's continue with the understanding of the FX rates. So in the previous slide, we understood that when we talk of currencies, we always talk in terms of pairs and we always talk in terms of base rate and reference rate. Foreign exchange rates are also quoted in a two-way quotation. The two-way quotation implies that every foreign exchange rate gives out two prices. The first price is called as the bid price and the latter price is called as the ask price. So the first price is called as the bid price or the bid quote and the latter price is the ask price. Bid implies the rate at which the dealer who is giving the quotation is willing to buy the base currency. Ask is the rate at which the dealer is willing to sell the base currency. So if the currencies always will be quoted at rates at which the dealer is willing to buy as well as willing to sell. Since foreign exchange rates are extremely volatile and they are very finely priced, the rates are quoted in terms of big figure and pips. Big figure is the figure that does not change during the quotation, and most of the time trading takes place only in pips. This is called as pip trading. Now let's understand the foreign exchange settlements. The date on which the trade is executed by the two banks is called as the trade date. In global markets, this is denoted by the alphabet T. T standing for trade date. So for example, if today, the day I'm recording this video, is 1st of April, not April Fool Day, then the trade date is T, okay, standing for the trade date. Now, why is the trade date important for those who are doing settlements? Because the trade date has to be a working date, obviously only then you can do a trade, and more importantly, the trade date determines the settlement date. The settlement date is denoted by the alphabet S. So the trade date is when the two dealers negotiate the price at which they are willing to buy or sell the base currency, how much of it they're going to sell, and what is going to be the settlement date. So on the trade date, the two banks will enter into a contract. This contract is legally binding on both the parties, wherein they agree to buy or sell a particular currency pair, right? How much of that currency are they going to sell, and what is the rate at which they're going to trade in that currency. So all these three things are determined on the trade date. Then comes the settlement date. The settlement date is the date on which the actual exchange of currencies takes place. Okay? The settlement date is a date that allows the traders to settle their contracts. So the meaning of settlement is you only pay for the asset by the settlement date. Okay, the operating word is by the settlement date the contract has to be settled. So on the trade date there's a legal binding on both the dealers who have entered into the contract. There is a legal binding that they will settle. It's an honor. It's a question of reputation, right? And on the settlement date, the actual exchange of currencies has to be done, okay, on the settlement date. Let's look at now some of the common terms that are used in the settlement context. If the trade, I'm mapping it out in this way: the trade date, the term that is generally used in the markets, and the settlement date. So let's say today, being April 1st, is the trade date. This remains the same in these three scenarios. Okay, so I'm presenting to you three different scenarios, three different terms, and three different settlement dates. Today is a Friday. So April 1st, on 1st April 2022 is the trade date. The dealers agree to do the settlement on cash basis. If the dealers agree to do the settlement on cash basis, then the settlement date is today, the same day as the trade date. Is this clear? So when the dealers enter into a contract, they have to mention the terms of the trade, whether it's cash, term, or spot. Second scenario, the trade date is April 1st. The term is settlement TOM. TOM is a short form for tomorrow. Okay, there is no body called Tom over there. It's only a short form, it's an abbreviation for the term tomorrow. That means the settlement is going to take place on T plus 1, that is trade date plus 1. But look at the settlement date. It has become April 4th. Why is that so? This is because April 1st is a Friday, T plus 1 is a Saturday. Foreign exchange markets are closed on Saturdays and Sundays. No settlement ever takes place on a Saturday, Sunday. And the settlement date therefore gets scheduled to April 4th. This is for T plus 1 contracts. In the third scenario, the trade is taking place on 1st April. The term of the trade is spot. That means the trade is going to be settled on 2 working days after the trade date. 1st April this year happens to be a Friday. T plus 2 means Saturday, Sunday are not working days. They are global holidays for foreign exchange markets. That means T plus 2 working days. That is April 4th is a Monday, April 5th is a Tuesday. I checked the calendar. April 5th is not a holiday either in the markets where the trades were conducted, and settlement will take place by April 5th, 2022. So remember this. In the settlement date, if there is an intervening holiday, the settlement gets postponed to the next working day. If the holiday is a global holiday, okay? So it has to be a working day at the settlement location. Otherwise, settlement cannot take place. So if I look at USD INR contracts, the settlement location is USD. So it has to be is the US. So therefore, it has to be a working day in the US for you to be able to schedule the settlement process. Okay. So have we understood now the terms cash, TOM and spot? Okay. So remember, foreign exchange markets are OTC markets, so they do not have any standardized settlements. There can be no settlement on Saturdays, Sundays or any other global holidays. Like Good Friday is a global holiday. So then we cannot have a settlement on the occasion of Good Friday, even though it's a Friday. Now we have to complete the settlement of that trade. For this, we delve into the topic of correspondent banking. In correspondent banking, we are going to take a look at the most commonly used terms are Nostro accounts and Vostro accounts. Nostro account means my account with you. These are Italian terms, okay? So Nostro means mine, Vostro means yours, okay? So it's a bank account which is opened by banks with other banks in different currencies in different countries to facilitate the settlement process. So Nostro account, therefore, and Vostro account are needed. Okay, Nostro account especially is needed to close out the settlement process. Vostro is just a supplement of the Nostro account and doesn't mean anything different. Nostro account. Let's take an example. Bharat Bank, an Indian bank, has a dollar account with Yankee Bank in the US. So I've already identified over here 2 entities. The first entity is Bharat Bank. The second entity is Yankee Bank. Bharat Bank is an Indian bank. Most of the transactions done by Bharat Bank are in INR. The second bank is Yankee Bank. It is based in the US. And most of the transactions done by Yankee Bank are in USD. In order to facilitate cross-border trades, Bharat Bank opens a dollar account with Yankee Bank in the US. So this foreign currency account, which belongs to Bharat Bank but is held with Yankee Bank, is called as a Nostro account. Who owns the bank account? Bharat Bank. Whom does the dollars belong to? Bharat Bank. Who's holding those dollars? Yankee Bank. Similarly, Bharat Bank might be having a lot of customers who need JPY, so they have opened a JPY account with Sumitomo Bank in Tokyo. Who owns the JPY? Bharat Bank. Who holds the JPY? Sumitomo Bank. So therefore, for Bharat Bank, this is a Nostro JPY with Sumitomo Bank in Tokyo. Is this clear? When Sumitomo Bank talks and refers to this same Nostro account, they will call it as a Vostro account. Is this clear? So Vostro is not a different account. It is the same account, but the terminology is different. For Yankee Bank, the dollar account of Bharat Bank is a Vostro account. For Bharat Bank, it is a Nostro account. So my account with you is Nostro account. Your account with us is Vostro account. Is this clear? Many people tend to, and I love to ask this interview to candidates, especially those who want jobs in global investment banks, asking how different is Vostro account and Nostro account. Remember, it is not different at all. It is only an expression. Okay, it is only an English language expression, or which says that it is your account with me. Such a bank which holds foreign currency account on behalf of other banks is called as a facilitator bank. So in the first example where Bharat Bank is having an account with Yankee Bank, okay, for Bharat Bank, Yankee Bank is a facilitator bank. Bharat Bank is having a USD Nostro with a facilitator bank. Bharat Bank is having a JPY Nostro with a facilitator bank. So the term given to Sumitomo Bank and Yankee Bank by employees of Bharat Bank will be called as facilitator bank. Let's take an example. Bharat Bank sells USD INR spot trade to Paisa Bank in the Indian foreign exchange markets. Okay? Bharat Bank is selling USD INR. So you know what you're selling. The terms of the trade say it is spot trade. That means T plus 2. Who is the counterparty to the trade? Paisa Bank. In order to deliver this USD to Paisa Bank, because Bharat Bank is a seller, so it has to give dollars to Paisa Bank. By settlement date T plus 2, Bharat Bank instructs Yankee Bank, that is the facilitator bank of the USD Nostro account, to debit the USD Nostro account. Okay, so this second leg is very, very important to understand. That is, by the settlement date T plus 2, Bharat Bank will instruct Yankee Bank. How will they instruct? Through Swift message. They will instruct Yankee Bank, which is the facilitator bank of the USD Nostro that is owned by Bharat Bank, to debit the dollar Nostro account. Paisa Bank receives the dollars by the set. After this, the next leg is Paisa Bank will receive the USD credit in its USD Nostro account, which can be with its other bank. Okay. Now, when Bharat Bank has debited its Nostro account and it has received the rupees, Paisa Bank has paid the rupees and it has received the dollar Nostro credit for the transaction. Now we can say the transaction is settled. Alright, so these cross-border settlements are extremely crucial in terms of timing, in terms of accuracy, in terms of precision, in terms of understanding. So if you have any doubts, questions or comments, please share it in the comments box below. I'm waiting to hear from you, and please give suggestions on any topics that you might want me to make a video on. Thank you very much, and my very best wishes to all of you. Take care and stay safe.